Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is trapped in between resistance and support from a monthly standpoint. So essentially, we have a market which is inside of a monthly range. In fact, we have resistance here at the top, and the market has rejected this level to the downside multiple times. And at the same time, we have support here at the bottom, which again, the market has tested multiple times and respected as resistance. So from a monthly standpoint, at the moment, the market seems trapped in between this resistance and support. And until it will remain in these two levels, we could expect more ranging, so more horizontal price action from a monthly standpoint. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice a quite important resistance zone which this market has just tested. In fact, this zone here was acting as previous weekly support here, preceding these two rejections to the upside. Then the market broke below the level, and all that previous support was turned resistance here. And the market has in fact just tested this previous weekly support and resistance, already started rejecting it to the downside. And from here, we could expect a bit more bearish price action to be created. And this level here is a quite important zone because it is actually a confluence of resistance area, because we have both these previous levels of weekly support, which are now on resistance, and also we have a strong impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area, which the market has in fact just tested and now has started rejecting to the downside. And inside of a confluence of resistance area, you expect more institutional shorting, which at that point should further increase the probabilities of a potential rejection to the downside away from the level. In fact, dropping down the daily time frame, what we can see is that we had already identified in the previous analysis this strong resistance zone. In fact, I made a full breakdown of USDCAD just a few days ago, explaining all the reasons for which we could expect this move to the upside for the market to test that resistance and then for the market to be rejected to the downside, which is in fact exactly what the market just did. The market from here went, tested that resistance, and then it got rejected to the downside, which is exactly what we expected from the previous analysis. And by the way, you find that previous analysis linked in description, so you can go and check it out for more free education. Now, in a situation like this, from a daily perspective, we must identify the new structure. In fact, at this level, we have quite strong previous daily resistance from which all these previous rejections to the downside were created, which is now turned support here. It is very important to keep in mind that until the market will remain above this level from a daily closing perspective, it can easily be rejected to the upside because the market is in fact above daily support. And until it will remain above this daily support, it can easily be rejected to the upside. The only way in which this market could continue lower is if we get a break below support. In fact, if we get a break below this support after the break on the retest of the previous support and resistance, this is where we would have good probabilities of seeing a potential rejection to the downside, because at that point, we would have good probabilities of getting more institutional shorting of USDCAD instead of this level, which at that point would further increase the probabilities of a potential rejection to the downside below the zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the CAD, we can see how with the last reports we went from minus 70.4k net positions all the way up to minus 13.3k net positions, showing a strong increase of the net positions, so essentially meaning that institutions are moving back to the bullish side of the CAD. And keep in mind that all currencies on the spot are traded against the USD, so institutions longing the CAD are essentially shorting USDCAD. So to recap, until the market will remain above this support, from here it can easily be rejected to the upside. However, if we get a break below the support after a break on the retest of the previous support and resistance, here there is a good probability of getting more institutional shorting of USDCAD, which at that point would further increase the probabilities of a potential rejection lower below the zone. So what I would expect in a situation like this, if the market actually breaks below the support, well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if the market instead of here would shift from an intraday bullish market to an intraday bearish market, at that point, I would expect a potential rejection to the downside to complete this daily impulse correction and impulse pattern to the downside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it.
If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.